Welcome to another episode of the Pepper Soup Talk Show. So we're doing something a little bit different today. The three of us here, myself, Tyrone, and Toby, we are all active traders and investors in the financial markets. And the markets have been very crazy lately, especially to start the year 2022. And so we're gonna talk about our approaches, how we're kind of looking at the market, our observations, and what our strategies are as we navigate the waters as we move forward in 2022. And so to get this started, how you guys feeling?
How you feeling, too? I'm feeling like there's a lot of opportunity out there.
You're like, I'm feeling good.
Yeah, it's not the same as, went to 2021 thinking everything was sweet.
Yeah.
And, it caught us off guard, losing
Mm-hmm.
money here and there. And, we're a little bit more inexperienced, but, we learned from it. And, we're prepared for what's ever coming at us this year.
Can you touch a little bit more on that? Like, coming into 2022, can you talk about like some of our past experiences? Can you talk about like what was it like in 2021? Because we could all, sort of relate in some of the same ways.
Right.
What did it feel like in 2021 versus, what's the mindset now?
Yeah, true. So I guess we all started in like 2020, really investing heavily. Learning, taking all these courses, learning this from that trader, and even doing some of our own practice. So 2020, the market was just running.
Yeah.
Everybody felt invincible, unstoppable. We thought it was gonna last forever. And reality hit us in 2021.
Yeah.
And it hit, but we let it keep on hitting.
Yeah.
Instead of pivoting, trying something else.
Yeah.
Reallocating your assets, and just look deeper into what's actually happening.
Yeah.
And preparing yourself for long-term success.
Yeah.
So 2021, as we all know, was a little bit rough.
Yeah.
But we made it through. And having that in mind, we had some of our most major gains in 2022, still in 2021, but also we had, some of our biggest losses. And those losses, I think, kind of made us, for what we needed in 2022.
That's right.
So, everything was just a learning experience, and coming into 2022, had a little bit more of a plan, At least for me, I think I shared with y'all, I was thinking, everyone, as soon as January hits every year, just be in a cash position, just so I can reset myself, my mind, and everything I'm, approaching.
Yeah.
And thank goodness I did, because things came crashing fast.
Right.
Yeah, for a lot of the positions. Last year I'd be sweating like, oh dang, what's going on?
Yeah.
How did I lose so much money? How can I, X, Y, and Z? But thank goodness, I didn't get stomped out of the market. 2021, I have some, I still make a good amount of profit. Yeah. And then I can use it to, do better in 2022.
Right. Yeah. For sure. And I think to provide some context for, like, if you're tuning in and you haven't been abreast with the market, in 2020, there was a crash in March during COVID, and everything came down not even just the stock market, but in other markets too, and that was a real opportunity for a lot of people, but then, as Toby mentioned, a lot of us were really starting to get heavy into market around that time, and during that time we started seeing the market start to ride back up, and we were able to catch that train, but the party stopped at some point. As we got into 2021, like February and March, the markets started coming back down.
Yes.
And some of those profits came. A lot of those profits came back down, with it. And so that's all to say that now going into 2022, we've kind of seen a similar correction. It hasn't been a crash in the way it was in 2020, but it's been a correction where I think the market hasn't corrected in this way since March 2020, during the pandemic. Usually when you start the year, there is a rally, and it's New Year, and a lot of new money is entering the market, new people entering the market.
Yep.
But it's been very different in 2022. And so let's see how are you feeling about things?
Man, where do I start? It's like a roller coaster, literally. Like Toby just said, looking at every year as a new cash position, because every year is so different.
Yeah.
And even though I can, and it's funny because we think about, looking at each other now, we're such better traders than we were in the beginning.
Yeah.
But we had to go through those, literally, those losses and gains to just have a clearer picture. So for me now, I'm not as nervous as what's to come. I'm more prepared, and you just have like this app to just be able to navigate with whatever comes. So I feel like that's one of those things for new traders to really understand, and investors alike, that you have to just be like, you have to be willing to adapt. Yeah. And once you have like a skill set and a discipline, the money will follow. So I feel like that's what I've learned. I mean, don't get me wrong. Like we made a lot of money, and and that's what kept us, invested it. Yeah. I still remember the days that I took losses. Yeah. And I'm like, why do I remember those dates so much? We were vividly. Like 2020, the market was riding, and we can't go and speak on the fact that so much money has been made for new investors. Is because of the pandemic and the markets being stressed and the economy being in such a disarray, they chose to pump so much, trillions of dollars into the economy so that it can stay afloat. So that trickled down to businesses, especially businesses that were able to get funding at a low rate, and a lot of that trickled down into the stock market. A lot of people took the stimulus checks. So we're definitely on a bull run. So I feel confident, but it's not like 2020. Yeah. And like I said, September 2nd, I'll never forget that, is when things started to correct. February 10th was the second catalyst for March 2021. I'm sorry, 2021, when all of our gains from 2020, or some of them, became crashing down, and now 2022 hits, and what brought all this glory, which is so much money being pumped to the market, is now being taken away, I guess, with the rate hikes, as they're starting to pull back, which makes complete sense. Yeah. But I just feel like Toby just said, like, I just feel in a different mental space. Yeah. And like, even looking at Facebook earnings today, right. Like a top company and a $1 trillion company just lost 20% of its market cap. And I would have probably been like, oh my God, what happened? But now it's just, it doesn't even make you budge. Yeah.
So with all that said, we hope that we could provide some sort of color, and that you could take out of our experiences as you're going, approaching the market, and as we discuss the market. But we have to say that this is not financial advice in any way or form. These are just our experiences and our conversation around this, and so you just mentioned Facebook, and so let's talk about it.
Wow, I mean, even the big dogs. Like, nobody's safe in 2022. Yeah. Everybody was safe in 2020. Literally, like the Neos of the world, and all of those companies that just even made money off the backs of EV space speculation. You had Palantir and SPACs. It's just insane, and now I feel like it's becoming a real market of like winners and losers based on valuations, based on profits, so I think we're now about to see what what it really feels and looks like. That's where I'm at.
And I think a company like Facebook, because we're talking about the earnings right now. They just reported the earnings, and they missed their mark. Right. And
not even by much. Yeah. Not terrible guidance.
Yeah. And so we could definitely say that was overreaction. Right. To the way the market responded to it, because the stock came crashing down. Right. And my personal feeling is Facebook, they changed their name to Meta. And I think it's interesting how Facebook and and Square, which changed its name to Block. Both of those companies are not doing well all right now, just as far as the price goes. But they're both visionary companies and have visionary CEO leaders, and it's so if you're going long, if you're thinking about it long term, these are both companies that at least I believe you can put your money behind, you can back,
right.
And so, you know, some people might be looking at it and thinking, man, what the hell's going on with Facebook? But I don't know. I'm looking at it and I smell opportunity.
I smell a 2024. Yeah. I mean, it's just crazy. I mean, look at Google. Everyone smashed earnings. So. Yeah. And then I feel like a lot of people got caught off guard with Facebook. Yeah. Tesla, one of this, like, what? Tesla's year over year is up there with the Apple iPhone. Tesla cars are just as profitable as an iPhone, which is insane. Yeah. And then you got Google, like, and that takes over in the ad space. YouTube. It's just not even fair, the amount of, like, you know, force they have. Yeah. And then Microsoft taking over the cloud space. Right. So I don't know. I feel like we're at the beginning of a recalibration. Yeah. We know and love these FANG stocks for years. Yeah. They rule the market, you know, but I feel like now it's like even Netflix. Yeah. You know, Netflix got obliterated, so I feel like we're going to see I think we're in the beginning stages of a different FANG. Yeah. And even though ARK has been down, yeah. So much. Kathy did say this. Yeah. She said that there will be a new FANG in the future, and it won't be the same stocks that we see now, and it's going to be more disruptive innovation. I don't know how that's going to look, especially with blockchain and technology. But I think that we're seeing the beginning of it. Yeah. And again, you know, want to thank everyone who's tuned in with us on Pepper Soup Talk. And so when it comes to the market, like, what are y'all approaches right now? We saw Google yesterday had a stock split. Yeah, that's major. Yeah. I've never looked at Google because it was just too expensive. But now I'm very excited because I can buy shares. I feel like Google is unstoppable, so it's going to be a good opportunity for retail investors, and I'm going to take you up on that. Yeah.
My approach this year, for me, I'm trying to skim my efforts, I should say, compared to other years. Less is more? Yeah, less is more. You know, trying to chase every trade. Yeah. Definitely wasn't worth the stress, the heartache, the losses, the profit. The profit ain't even that much if you don't really know what it is like that. Yeah. And doing more, let me say, my own due diligence. Yeah. Because it looks good on paper doesn't mean it's good for you. Right. And sticking to what my strengths are, I should say. So I'm skimming everything I do to the minimal. Yeah. You know, check up, read on the stocks. Yeah. Know what's going on, but I don't have to move every time. Yeah. There's something going on. Just take it easy. Right. The market will wait for you. If there's an opportunity today, there'll be an opportunity tomorrow. So that's one thing. Like I told y'all, my number one stock is AMD. Yeah. That was like the first stocks I started investing in since college. Yeah. So I kind of understand the movements better, but I didn't really pay attention to the signs because I was money hungry. Yeah. So now that got that out of my system, I'm like, okay, I know how the stock behaves. It runs like this, it consolidates like this, and you should be expecting X, Y, and Z, and just take my time with it. I know it gives plenty of spaces for entry, and just look out for any news regarding it. So I'm more heavily focused on seeing what AMD does throughout the year, and possibly having long-term options in like XLY. Okay. For the most part, I might add another company or so, but for the most part, just sticking to it.
What is it about AMD that you like? And can you talk a little bit more about AMD?
Just the stock as there's layers to it. So just the I don't know the word for it. The stock movement, for example.
Like its price action.
Yeah,
right.
the price action. Specifically, the range. Let's say the last. For this past month, the low was about, I think, $99 or $90. When it started to run, it went from 99 to, I think, 130 or 134, somewhere around there.
What, these past couple of days?
Yeah, this past couple of days.
And it was at like 160, right? Was it like 160?
The high
was 160.
And it came all the way down to 100.
Yeah. So those kind of leaps and jumps from high to low, you don't really, or at least I haven't found in any other companies. So you can expect it to do that periodically throughout the year. You can time the market, but once you see an opportunity, you take it. So if you buy somewhere near the low, you're expecting at least 30, 40, 50 points movement in a short period of time.
So with a company like AMD, like how are you playing it? Like, are you buying shares? Are you buying options?
I'm just doing options at the moment, just to build liquidity. That's my foremost goal. And then after that, I'll try to maybe buy shares and stuff like that.
And are you, when you play the options, because most people do the short term, like weekly options. So like, what's your approach to it? Are you buying weeklies? Are you buying monthlies?
Done with leaps. Leaps strictly. Done with weeklies, monthlies. I think we all understood the pain points in there. Maybe once my skills get better, we'll dive back into it. But the level of less stress with the leaps is one thing, and actually understanding more about the market is another. So there's more strength, behind when to enter, when to exit, and understanding the movement of AMD. That's very important.
So I know that when we all started really getting into the market, it wasn't easy to understand the value behind leap options, and it being long term, especially with the pricing too. I think a lot of people will say if you purchase a 1 year out contract or a 2 year out options contract, it's more expensive, and it's hard to justify like putting that money in. But then when you zoom out and you look at where these companies go over the course of a year or two, especially a growth company like, let's say, AMD, the return on it ends up being very, very like significant. So when you're playing one of these leap options, one of these long-term options, what is what are you buying?
In terms of the contracts, or
are you going 1 year out? You going 2 years out?
Gotcha. I'm doing 1 year and 2 year contracts. The 2 year contracts typically don't touch it. So for example, this correction we're in, I'm planning to buy again another 2 year and 1 year for AMD. So for the past, let me say 6 months or so, I've been playing the same strike price, same expiration, and just buying and selling at a cycle. So every time it hits a high, I sell, and then wait for the low, buy it back again, and sell again at the high. So just do the same thing. And
so you swing the
for the most part. I have the leaps, but if I see the opportunity, I take the risk off the table, then re-enter when possible. And that seems like it seems stable. We don't have to do all these YOLO plays in 2020 and 2021.
Where are you at with it? Are you an AMD fan? I heard Toby mention XLY. Toby, was it XLY that you mentioned?
Yeah, XLY.
XLY, which is the ETF.
I mean, I like all those. I love AMD. I like SMH. When we had our plan for the beginning of the year, when we discussed, because every year you want to have a plan just of what you plan to do and where you're going to get in and out. I just like the chip sector. I think it makes sense, and AMD is one of the heavy hitters along with NVIDIA and TSM. I think because of the supply constraints and just the demand for chips and the chip shortage, I think it's gonna these companies are gonna blow up the top. So I'm similar to Toby. I'm playing SMH very close. What is it? The box strategy that we learned about. I got a 2-year position out, and I also have a 1-year position.
What's the box strategy?
So a strategy that we came across, just basically if you're playing a 2-year call option, the longer out, there's a less risk. The shorter term plays are more risky. I mean, it's still a great return, but it's very risky.
Yeah.
So I play more liquidity in my longer plays. So SMH, I put most of my liquidity in that, and I play maybe a 6 to 12 month play on SMH, which again is going to warrant more gains, but it's more risky. But the way you save yourself in case any risk happens is you have that 2-year play, just in case, and you're also making sure you have you're also making sure you cut your losses if anything happens. But just like AMD, I love SMH, and that's where I'm playing it. Less is more. It's easier to focus, and once you know the companies and you know how they move, like I knew it was earnings season for the chip companies and for the big tech, so I felt very confident that this was going to happen around this time. I don't know what's going to happen next. I'm just following my plan and being adaptable.
When it comes to these companies, I think I can hear a lot of conviction in your voice around where they're going to be over the long term. Because even when you talk about a 1 year out or 2 year out versus say 6 months out, it's hard to know really where things are going in the short term. Like you can look at you look at technicals to determine where the price is going to go in the shorter term, or at least like get an indication of where it's going to go. But in order to get a sense of what's happening long term, you look at the fundamentals.
Right.
And so when you're looking at these different companies, fundamentals, like what are you reading, or what are you taking a look at to give you that conviction to know, oh, I feel comfortable putting in an ample amount of money into XLY or any of these other companies for the long term? Long term being, let's say, a 2 year out contract.
Again, technicals matter, and again, we talk about learning from the past, just getting in at a good entry, which is the 200-day moving average. I try to get into these companies, no matter how much I love the company. It has to be at a good technical standpoint, because then I'll have more room for growth over that trajectory of 2 years. But when I look at the companies in general, even as much as technicals matter, it's not as much as fundamentals for long term. I think technicals matter with shorter term plays, but for long term plays, it's strictly about what the company plans on doing. How profitable are they going to be from quarter to quarter? How likely are they to beat earnings based on what the market has bestowed upon them? If they have a moat, if they have a competitive advantage, if the price to earnings ratio makes sense based on the multiple. I mean, a lot of those things matter, but honestly, it's you can encapsulate everything, but it's really about that conviction. And when I think about conviction, I think about my favorite play. It's been since the beginning of time. That's where I've made majority of my money in Tesla. I feel very strongly about Tesla. I just think even and not to go off topic, like what was the survey that you raised the other day about the superpower and survey based on who? Oh wow,
like who's the leader of who's the leader of the leader of the world?
80,000 votes.
So it was on Twitter. We're on Twitter, and we saw a poll. Someone posted a poll. It was a Naval on Twitter. He posted a poll. Who is the leader of the world? And the poll was a list of presidents and then Elon Musk, and it was 80,000 votes. And Elon Musk was like the highest voted out of all these presidents.
Yes.
And that was very interesting to see.
Right. And I mean, I think it's people that voted just because he is richest person, but also just what he's brilliant. And like how you feel about AMD, like it's back tested. Like you've been in it since college, so you watched this company as again what they just noted, 11 consecutive quarters beating earnings.
Right.
Tesla has innovated. Tesla was saying these things in 2014 when no one was listening.
Yeah.
And now these companies that we know true and dear, these cars we've been driving that our parents drove, are now almost becoming obsolete.
Yeah.
And we're watching like this disruption happen right before our eyes.
Yeah.
And this is one of the first companies that literally, was resilient through it,
right,
and is becoming profitable. I just think this is the beginning for Tesla. Like, I think that it's going to be a $2,000 stock one day.
Yeah.
And I just think there's still no competition. I think the software is just light years ahead of everyone.
Yeah.
So again, my conviction comes with that competitive advantage.
Yeah.
Like what these other companies are trying to recalibrate and do, they have already done more successful than anyone. Like, they're not even a car company. Like, they're literally a tech company that is like, masquerading as a car company.
Right.
So when the Cybertruck comes out, when the semi-truck comes out, like, I don't see how, anyone will be able to compete.
Yeah, definitely. And I think when it comes to Tesla, a lot of the criticism that it's gotten is partly because of what you're saying, that like, it's you can't really call if you're really looking at it, you can't call Tesla a car company, and if you're defining it as just that, then you're not gonna interpret their data correctly.
Right.
Like, you have to look at it. You have to look at the tech, and you have to look at the energy. You have to look at these other industries too. Solar. To really be able to like know where Tesla is going, and understand why stock is moved and is moving the way it is.
Just one thing regarding Tesla, it's not only, you don't also only just look, well, let me not just say Tesla, just any company as a whole. You don't only look at what they're doing now, but also where they can be in the future, which is also a big factor if you're doing long-term investments or long-term, leaps.
For sure.
And that will also help project where that position will be in the future. But yeah, so if we were talking back in, for example, short term, back in 2021, we're talking about, the chip shortage,
right.
It's kind of sketchy, blah, 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 what we're going to do. But we're anticipating for the shortage to reside. Yeah. And then now there's a surplus demand. Yeah. And we know that people are lining up to basically buy chips. Yeah. Right. They're going to make profit throughout the year. And just based off of that, we know 2022 is going to be a great year for chips regardless, as long as they meet supply. Plus, I believe we said Lisa Su. Yeah. She said they increased the prices of the of their chips, not because of inflation, just because of demand. Yeah. So that's also another factor to project what's going to happen within the future. So it's not only what's happening in the present, but what's going to happen in the future is also a factor. And with Tesla, all the innovation they've done already in the limited space. Imagine where they're going to be 10 years from now. Right. Imagine when SpaceX is public also. Yeah. Well, Elon merged those companies. And whatever, all those other companies that Elon has underneath his belt, what's going to happen when those go, when those go public. Yeah. They'll be under the same umbrella company like Google and all its subsidiaries, Facebook and all its subsidiaries. Yeah. That's also something to consider.
And even like to speak on that, like we love Facebook. Facebook has allowed us to connect with in a way we never could. Yeah. And then we love Amazon. Like I genuinely am like I don't know what I would do without Prime.
I feel the same way, man. Because we had some technical difficulties setting up, right? And we had to order a new mixer cord, and even though we had ended up not even using that, but I was Amazon. I got it here in one day, and I'm like, you could say whatever you want about Jeff Bezos, right? By the end of the day, if you need something, and like whatever it is, pretty much with whatever it is, and you order off Amazon, it's gonna come to you, and it's gonna come to you on time.
They care about us. Yeah. They care about the consumer. Even with that being said, and Amazon does an amazing job with now the new CEO Andy Jassy that's focused more on the cloud competition. Right. But I just still feel like there's more of a usability for these companies that Elon Musk is trying to bring about. Like, I don't know if anybody has looked into the Boring Company. Like, he's literally trying to fix issues with traffic in these overpopulated cities, to make underground tunnels where you can get somewhere in 5 minutes that would normally take you 45 minutes. It's going to do so much for the ecosystem. It's going to do so much for just quality of life. And then the fact of the matter is, it'll be a lot cheaper because you can pay less money to get from point A to point B. And if software does come out and we know which is coming as far as the automated, it'll be automated driving at a safe level without someone needed to be in the car. And now again, this is innovation that's coming, but like just the fact that nobody's doing that, it's insane. And on top of that, it's innovative, it's eco-friendly, it's sustainable, and it's what's going to help push us forward as just not just making money, but as a race. So that's kind of where my bias goes, where it's it's a profitable company, insane innovation, but like he actually cares about what happens when he leaves.
Yeah, I think really zooming out and looking into the future, it gives you a good sense of where to place your bets. And I think when you look at what's going on right now in the market, it's beautiful to see, because as we mentioned, a lot of these companies, these high growth companies especially, because we really like tech, right? A lot of them have come down significantly, and knowing where they're going long term, it gives you a sense of what you might be interested in, putting money into. And so I heard you mention 200-day moving average when you were talking. What are some of the indicators that you use to decide your entry points and where to get in? Like I would say, I like 200-day moving average, and which is 200-day. The moving averages are an average of the price over a particular period of time. Right. So you have the ones that are typically looked at: 20-day moving average, 50-day moving average, and a 200-day moving average. And when a company and a strong company that has strong fundamentals comes down to its 200-day moving average, then you know that's a good entry point, because over a longer period of time, it's gonna revert back to the 50-day, and when it's been overbought, or it's riding kind of high when it starts approaching its 20-day or gets above its 20-day moving average. And so a lot of these high growth companies have come down to their 200-day moving average, and so that's one of the reasons why I'm bullish on, or at least maybe bullish isn't the word, but like why I see right now it's a good opportunity, regardless of what happens in the short term.
So what are you bullish on right now?
So what am I bullish on right now?
Rather it's on the blockchain, or whether it's in the equities market.
Yeah, no, for sure. So I like, we talked earlier about Facebook and Square. Okay. I like Square, or Block. They're called Block now, and part of the reason is because of the fact that they're moving more into working with blockchain and thinking about where technology is going long term. I like the fact that Jack Dorsey stepped down from Twitter and is focusing on Block now, and the company is strong and they already had their vision set, but the fact that they're making this much of an investment by changing the actual name of the company to reflect where the times are going, it makes me feel even more confident in it, and then seeing how far these fintech companies have come down. Again, we'll see what happens in the short term. There's still this conversation about interest rate hikes, which we know are coming, and we can kind of anticipate how the market might react. A lot of that might already be priced in. We'll see how many end up happening, and then how the market responds to those. But we know that over the long term, that a company like Square that was over $200 for one share last year, that's come down to like $175. That's now down to $110. Right. That right there, even if it continues to go down, it's way below its 200-day moving average, and we know it's a strong company. So I would say, I'm a square or block, whatever you want to call them, guy. But I've been very heavily focused on crypto and DeFi world, as you guys know, and with that, DeFi, short for decentralized finance. A lot of the kind of institutions that we see in the traditional finance world are now being basically replicated in this more decentralized world, or a world that has aspects of decentralization to it. And these are a lot of protocols, what are being called protocols, that are built on top of the blockchain that are powered by crypto. And so there are a lot of different ways to invest in these different protocols, whether it's yield farming, which is basically supplying liquidity to platforms to help them, to help power them, or to help them grow, whether it's directly investing in, let's say, crypto currencies or utility tokens, whether it's holding even just your money on a platform that's giving you a good interest rate. And so like I've been very heavily into the crypto and the DeFi market, DeFi specifically, which is kind of a branch in more recent times.
I feel like people talk about and the mainstream media speak on Ethereum as a blockchain and Bitcoin. And it's like literally, like they're like the OGs, and they've made it okay to even discuss crypto.
Right.
So, but again, I feel like we just talked about Fang, etc.
Right.
And there's going to be some other companies or some other entities that are coming for that number one spot.
Definitely. Definitely.
Since you have been very invested into DeFi and you understand how these things work, can you speak on the other L1 competitors for Ethereum? And out of those, who do you think is coming for that number one spot?
Well, I'll say that there are a lot of other. So Ethereum, as we know, is a blockchain, and we have hundreds and hundreds of applications that are built on top of Ethereum, and that's one of the reasons why people like Ethereum so much, even more than a lot of people, more than Bitcoin, because they feel like there's more of a use case for Ethereum than there is for Bitcoin. With Bitcoin at this point, especially given its volatility, when people have talked about it as a store of value or currency, it's like there's still like a large debate around Bitcoin's use case, even though it's pretty much set given how we're seeing institutions pile money into it, and people who are backing it. We saw like El Salvador create Bitcoin, announce Bitcoin as a legal tender. And we're seeing other countries start to do that, and we're seeing like different rulings come out like day in and day out. But when it comes to Ethereum, that there's that use case there, and it's a lot more tangible. Like we're seeing these applications that are built on top of it, but we're also seeing that it's very expensive to use Ethereum. Oof. And until you start using these platforms,
gas fees.
Like to transact on Ethereum, it's very expensive. You can, for the average person, it doesn't even make sense. You can end up spending more than even buying on just the transaction itself.
Right.
And so there are a bunch of other blockchains that are in the conversation too, that maybe don't have as many developers as Ethereum does, or they don't have that same network effect, because that's really what's kept Ethereum in that sort of number one spot.
Right.
But are faster, the fees are significantly lower, and have their own reasons for why they might be better than Ethereum. And a lot of these platforms are called L1s or layer ones.
Layer ones.
And also call they call them Ethereum killers. And when you go onto these platforms, it becomes easier to understand why that's the case, because again, because of how fast it is to transact on them, and how fast it is, and how cheap it is too.
Right.
And so, to answer your question around who is coming for that number one spot, to be honest, what I've noticed is like the market move, the crypto market, and what we're seeing with Web3, it's all happening so fast. Like it happens, it's like 2 weeks, 2 months in the market feels like two months or 2 years. Like it moves so fast, and so honestly, it's hard to know what will actually take that spot.
Right.
I actually saw something earlier today that was, I think someone actually asked that question. I saw it on Twitter. Like someone asked a question like, "Who will Ethereum still hold that spot of the most used blockchain, or the main blockchain, or like will another company overtake it, and how long will it take?"
Right.
And the way I kind of see it is, it's still a conversation. It's still a conversation, and I believe, just given like how well functioning a lot of these other blockchains are, I see that at the very least, even if Ethereum is to win out, at the very least, these other blockchains will definitely be involved. So maybe that means that we live in a multi-chain world.
Right.
However, there's a conversation with that as well, or debate with that as well. Today there was literally there was a hack on what are called bridges, and a bridge is what connects different blockchains together.
Yep.
And so you can transfer funds, for example, from Ethereum to another blockchain, for example, Phantom or Avalanche or Terra Luna, which are other examples of other blockchains. And there was a hack of like it was 120,000 Ethereum from a bridge called a Wormhole. And there's a vulnerability there, because a lot these bridges aren't. First of all, the bridges are usually pretty slow to like transfer money from, and there's a vulnerability with those bridges, and that's something that I think even in 2022, when we think about different narratives, bridges might be one, because those need to be improved a lot. And I think that the platform is backing it. So if there were to be any money stolen, like personal money stolen from any users, like you would get that back, or like maybe you wouldn't even have felt it, but like it was the fact that the platform got hacked, that that Wormhole got hacked. And so but I think multi-chain world could make sense, a world where you have like a sort of like a network of blockchains could make sense. And so, for example, there's a platform, it's called Atom or Cosmos, like the token that's sort of affiliated with it is called Atom, and it's what they're doing is IBC, which is I believe the term for it is like blockchain communication.
Right.
And so there are you can kind of look at it as a blueprint for creating a blockchain, and there are a number of different. There's quite a few platforms that have basically used their blueprint to build their blockchain, and that are now like able to then, if they allow it, able to then communicate with each other. And so, for example, Terra Luna is like used Cosmos's blueprint.
Right.
And then even some of like the exchanges that we know, KuCoin, Binance. There are a number of them, and then they have like a option to basically like unlock the ability to communicate with these other blockchains, and so the conversation of how communication among blockchains looks like, what blockchain is most used. You have Polkadot, which is also kind of similar. Polkadot is a network of blockchains. You have what I call like different parachains that communicate with each other, and so. It's still, this is always say that it's still very, very early.
Yeah.
And we have to kind of, the way I kind of approach it is observing as we go along, and looking at what has a lot of functionality already, where the money is going to. And so my favorite is without doubt Phantom. right now because of the amount of money that's been piling into Phantom over the last few months, and then also like the opportunities on the Phantom platform itself, and then and Luna, and because of the number of protocols that are being built on it, there are hundreds of protocols being built on Luna right now, and so will these be the ones 5 years from now, 10 years from now? Like, I don't know, but I will say that, you know, right now, like, there are definitely, you know, opportunities on those blockchains themselves with the applications being built on them, and even the tokens themselves over the longer term.
What's up?
No, I had to speak on that. Like, I actually experienced it myself.
Yeah.
You know, I purchased Ethereum for the first time this year.
Yeah.
I transacted with it, and then I purchased Phantom, and I transacted with Phantom through the different channels. Again, he's spoken on bridging, etc.
Yeah.
And it just seemed to me like it was a world outside of the world that we know.
Yeah.
As far as in the equities market. And it's one of those things where, like, as much as I'm still learning so much about the DeFi space, especially I'm very interested in the DAOs, the decentralized autonomous organizations. I feel like it's one of those things where, like, you need to go that extra mile to learn something about this, even if you aren't interested in it yet, because regardless, the future is coming, and it's going to happen, and I'd rather get ahead of it than be reactive to it.
Definitely.
Especially because I think the technology just seems so far, especially if you're in the gaming space, which I'm not, but I think it can be highly integrated. And my last thing is, I'm going to always go back to Kathy and the ARC team, because I think they're brilliant, especially with the big ideas that come out every year. And as you noted, like, this is the first year where she raised a lot of questions and research on the blockchain. She spoke on Luna. She spoke on Solana. And this was never discussed before. And we've reviewed it every year. So I think these are the beginning stages of this insane amount of disruption that not only do we still don't know so much about it, I feel like even legacy companies still aren't sure or confident about it. So I'd rather be in it, even if it's at a small level, than to just wait to see what happens.
Yeah, you know, there's this saying that the money is what brings you to that world, but it's the technology that's what keeps you there. And when you start actually using some of these technologies, you understand why. Like, it's just powerful. Honestly, you know, it's just powerful.
And back to purpose, and the fact that they want to do these things and create these different entities of businesses and VC firms for the small guy to win, the retail investor, and have it trickle down to them rather than these big banks that take our funds and use that to invest themselves to get a surplus of money and give us that 0.006 interest. So I think that's also dope too. But again, I'm still learning so much more, but I can't wait to see what happens next.
Definitely, and I'd also say too, to that point around decentralization and around also being able to have more of a stake in these platforms or companies that are built, and which is very much the case in the Web3 world, is something that's very important. Therefore, for our communities to be a part of this early, because oftentimes we are left out or don't have that level of access because of communication, and because of maybe even when technologies have, earlier technologies have come about, it was in a different time that didn't include social media and didn't include being able to have access to the information. But there's so much access now, and there's a lot happening in the space, and I think that it's something that is very important for, like, our communities to be a part of. And oftentimes we have that fear of taking those steps, especially when it comes to things that may seem a little bit less tangible. But it's something that but I believe is very important that we start really digging deeper into.
I agree.
Because even like Web3, I mean, there's a clear gap between Web 2 and Web 3, but as I've gotten deeper into it, I'm starting to see that it's not as big a gap as one might think. That even like if you're a Web 2 developer, for example, it's not a huge gap to go from a Web 2 developer to a Web 3 developer. When I was looking at the number of developers that Phantom has, for example, which is one of the blockchains, I think they have only like 30 or 40, like don't quote me on it, but only like 30 or 40 developers, like in total. And imagine, deciding to code for Phantom. Like a platform that is having, millions and millions of dollars just being piled into it right now. I don't know how much they're paying Phantom developers, but but it's like those opportunities really do exist for people in our community as well.
And so, the demand is so high.
And the demand is very, very high.
The demand is so high.
Yeah. So. Yeah.
So just one more point. I know we're getting to the end of the hour.
Yeah.
So both of you, you've been in real estate for a minute.
Yeah.
You were there pre-pandemic.
Yeah.
During the pandemic, not let me say post-pandemic, but about to enter an interest rate hike, let me say. That's paving the way, I guess, quote unquote, post-pandemic.
Yeah.
What are some of the challenges y'all experience through this, let me say, change in the economic system in real estate, and what are you expecting to happen, I guess, within y'all's sector once the interest rate does kick in, and was there any benefit during the pandemic with your real estate properties?
Even with the rate hikes, I think, because the interest rates started to rise. I just refinanced on my house. Why would I not? When the rates are just so low. And we also, the pandemic, again, so much money was pumped into the economy, and we're in Philadelphia. We're one of the prime markets.
Yeah.
So, I've gained 25% equity from not doing anything. If you want to relate it to the stock market, the value has risen, and I invested into this like the S&P 500 without having to put in any investment into it besides just having this tangible asset. So I think if anything, it's just shown that, and I want to connect it back to just like, the DeFi space and how we need to make sure that we get ahead of this before it happens. Like in Philadelphia, if for our communities, these are homes that were sitting there waiting for us to take them, take advantage. And it's still here. So like, what are you waiting for? What are you waiting for, literally? And I just think that, I do think that the prices are going to come down and it's going to start to rebalance. But I don't see the demand, especially for Philadelphia specifically. I don't see it slowing up. And I think if you have any opportunity to grab an asset that is a home or a building, like you see construction going on almost every single day, like don't be reactive to it. Just really dig into it and be a part of it, especially if that's your city.
Definitely.
So again, I look at it, just like we all said about the market. It's an opportunistic time, and I feel like we have to take advantage. Technology, real estate, investing, they all live together, and I mean, I'm excited.
And I also said too that with what we're seeing because of the pandemic with remote work, that you don't have to be in your city, or you don't have to be in the city that you necessarily are working to. You don't have to live in the city that you necessarily work in, and so that is something that will also shift the market as well. People who maybe want to move to a Philly to live, but work remotely elsewhere, and I think we're already starting to feel the effects of that. And so that's something to think about too, like how that'll affect a market like Philly and other markets across the country that are attractive to the more expensive ones, like a
New York, versus here.
So I've been talking to y'all for a minute just regarding y'all experience, about real estate. I'm still weighing my options and seeing the opportunity in which path in the real estate market I want to go. But one thing, just to put in my 2 cents from the sideline, you did mention the construction going all the way around. The change is clear within a couple of years. If you go to the Fairmount area, compared to a couple blocks up north where we are, you can see the change in wealth, change in culture, from Fairmount to
that gentrification.
from Fairmount to here in like Brewery Town or Strawberry Mansion, the changes are becoming more clear every passing year. Even when I was out in Fairmount, there was this Rite Aid on the block. You can go, they can get like, I'm not sure if you know, malt, goy seasoning, like things you can get from like the Spanish store or the African store in that Rite Aid. But now if I go to that same Rite Aid, none of that's there anymore. It's brands I don't even know how to pronounce, and things I've never seen before.
Like you would find in Trader Joe's.
Like ice cream gelato and some other stuff. But you can see the movement in wealth and things built around. And that's just adding to the points y'all made. There's a lot of opportunity here in the city, just to see how you can get entered into it. Even up here in further north, there's a lot of shutdowns. I mean, is it shutdown or foreclosed homes? You can see the signs. You can even just do what's that flipping thing? The contract, and then you sell
wholesale.
Wholesale, and there's a lot of people consuming for that. I can just see a whole block just just empty out here in Philly. So there's definitely a lot of money to be made.
Definitely. And to build on your point too, it's like be the change you want to see, because it's, as we've seen some of these neighborhoods change, it's you might not be able to buy malt from a store that you were at before, but if you're the one that is building the store, you might be able to supply malt in there, or if the tenant that's taking up the property is one that is in tune with that culture, can like still maintain it. And I think that's gentrification gets a bad rap, but it gets a bad rap because of how it affects communities that have been in a place for a significant period of time, but also like the communities that tend to occupy as a neighborhood changes. And I think that we're in a time where that conversation, if it hasn't already changed, like can change, and that comes from being able to like spot these opportunities and being able to be a part of them, but then also being a part of them in a thoughtful way too, so that it can be beneficial to all parties in the city. When I look at a city like Philadelphia, for example, it's just like a lot of other cities where the wealth disparities is so big, right? Philadelphia is I think it's the biggest part of I think it has the biggest wealth disparity.
Well, yeah. If not one of the very few in the country.
And that's
one of the highest African American populations too.
Right. And so that's very stark, and it's something that personally I believe it's changed through economic development, and it's changed through, of course, like the system as well. Like systems have to change, and policies also have to change, and that's also like a very significant part of it as well. But then also awareness has to change too, and knowing what's around you, and like having the knowledge to know, like if you own a property, for example, or if there's been a property in your family for decades, and you get offered $50,000 for it, to know like if that decision really makes sense or not at that point in time. And I'm gonna start ranting.
No. I get it, and I would love, because it's emotional. Because we really feel it. Like we're black, and we want to see everyone else, thrive and invest and learn, and not make poor choices and take advantage. So if anything, I hope people, that haven't gotten to investing yet, don't feel that fear, or feel less fearful to know that people that look just like you, one day sat in the same seat and they're still trying to figure it out, regardless of, the money that we have made and successes that we have. So what I guess I would say, in the market, since that's our bread and butter, and we actually love it, I would say that I can say we all do. What would you recommend someone now, like as far as a play, as far as a company, as far as any kind of investment that you would recommend them to look into, if anything they left from this conversation?
I believe the best way to start is house hacking.
House hacking.
That is like the easiest, like that's the lowest barrier to entry when it comes to like investing in real estate, because there are a lot of programs that exist to help you buy your first property. Like if you're a first-time home buyer, you can, of course, you have to have some savings. You want to have at least decent credit, but you don't have to put down 20%. You could put down 3.5% FHA, 3%, 5% conventional, and purchase a property. And house hacking typically is you purchase a property that you live in, but then you rent out the bedrooms, rent out the remaining bedrooms,
or
purchase a multifamily. Users actually purchase a multifamily, and you rent out the remaining units. But like you can go about it in different ways, and with that you can bring your housing costs down, and then it makes it easier if you're someone who's interested in real estate investing. It makes it easier to then go and buy more properties after that, and also gives you like a taste of what it's like to be a landlord. For example.
The pros and the cons. Which I know about all of them.
Right.
Because I was there, and it's a great. Oh man, I love it. But I'm sorry, Toby. What would yours be? Your recommendation to anyone listening?
My opinion is the stock market. I feel like it's
what specifically?
What specifically for me?
That you would give someone that they could lead this conversation.
You want to talk about real estate? You talking about
anything?
Anything. Oh shit! I didn't even know.
Oh, you can go if you want to change your answer.
I mean,
I'm giving. This is my example of Mark's 150 art.
Oh man, I mean, listen, like, I mean, I love real estate, and I think that whatever path you choose, or start with, that just get good at it, and you'll do well. So I'll keep that answer. That's cool.
Okay.
Yeah. But I do also want to say that
you can add some sauce on it.
I do also want to say that we're just talking about crypto and DeFi and all of that. And I was reading something earlier this week about how the metaverse is going to be at 8. They're saying I think it was Morgan Stanley said the metaverse is going to be they're estimating it's going to be $8 trillion industry. The way that ties into real estate is you can buy land in the metaverse, and we currently have different metaverses, right? And we have Decentraland and Sandbox are the two largest ones right now. I believe Decentraland is the largest market cap, and it's at this point expensive, right? If you want to purchase a property on one of those platforms, the floor price is like $30,000 or something, or maybe $15,000 on Sandbox. But the thing is that there are other platforms as well,
right?
And I think that if you're someone who is interested in real estate, or is even already in real estate, you might want to take a look at some of these smaller platforms that honestly are coming up behind Decentraland and Sandbox. And if you look at even some of them, like this one I heard about, I've been hearing about I think it's called Wilder World, I believe. But there's quite a few. There's a couple of them that I know. If you do your research, you can learn more about. But the graphics on them, and when you compare it to the Sandbox and Decentraland, like the graphics are phenomenal, and you can easily see some of these other platforms where it won't actually cost as much to purchase land, but that these big companies are going to be posting ads on, and are going to be blending the actual physical businesses with in the digital world. That how it could be a real opportunity to have land here that will appreciate, or that you might be able to rent out. And so I would say, it'll be good to take a look at the metaverse too for land.
Yeah, I'll say the stock market, and I'll say just invest for the long term starting out. That's kind of how I started. I wasn't consistent, but it gave me more, I guess, get my foot in the water to explore other ways you can invest in the stock market. And what I like about it so much is you can just use whatever's in your pocket to invest. You don't have to build as much capital, I should say, for real estate. I know that's, y'all love that, but for people who might struggle more to get that kind of savings or make ends meet or don't have that kind of time commitment, stock market is the place to be. You can do from your home anytime and anywhere. And you don't need that much to start. And even a company from AMD, when I started, it was like $15, $20. And if I just held on to the shares now, it's at what, 160 was the high. I don't know what's the multiplication there, but that's a lot of money. But just holding, investing regularly and holding for the long term. It might be slower, it might not be as beautiful as options or futures and stuff like that, but it's more secure, it's more stable, and there's not that fear of just losing it all out there. The market still goes into its hikes and peaks, or recessions and stuff like that. But if you're there for the long term, there's no stress. It will keep breaking its highs year over year. Just make sure it's a quality stock and just hold it for the long run. While in options, we have a time commitment. And if we don't meet it, you can lose everything pretty quickly if you're not careful. And the same thing with the future markets. So just for a population as a whole, just buy and hold stocks.
I love it.
Well, what is it for you?
I mean, I love everything both of you said. I mean, I could literally talk and just build off of that. So I'll try to find something different. I mean, I feel like there's so many opportunities. There's house hacking. There's putting some money into the metaverse. There's putting some money into the DeFi strategies like the L1s. And, out of, with everything we noted, I think someone starting out new, it makes sense to put money aside and invest regularly. So regardless of you're investing or not, everyone should have a portion of their money. Even like we noted in The Richest Man in Babylon, 10%. Some portion of your money needs to be paid out separately, rather it's going to be for you to save than invest. And I feel like that's the most important thing, because you got to start saving and you got to start being intentional with every single dollar, and you have to start learning. So if you have that fear, you only have fear, it's because you just don't know. So whether it's you house hacking or whether it's you getting into the stock market or you looking more into the metaverse and / DeFi strategies, while you are saving and becoming more disciplined, that's when you start to build onto the knowledge. Once you start to build onto the knowledge, then you're going to be keen more to what makes sense to you. Rather, again, that's crypto and DeFi, rather it's house hacking and real estate, because everyone doesn't want roommates and everyone doesn't care for the metaverse and everyone doesn't care for stocks. You have to figure out what works for you. And I think that starts with having discipline first and being able to save and be strategic and intentional with every dollar and using your time to really learn. And once you start learning, I feel like, it's like a snowball effect. And then you won't stop. And at least that's, how we felt at one point. Very ignorant, but now it's almost like an addiction. Like I can't wait to leave this job so I can start studying and look into different strategies, plays, and investing to make more money and create more wealth for my family.
Definitely. So this has been the state of the market, and you tuned in with us on Pepe Super Talk. Definitely please give us some feedback. Let us know what you like or what you think we could have done better, and if there's something that you want to see us do again.
Right.